Hi, Kamal. Welcome to the Business Standards Banking Show. We are discussing today inclusive insurance and how the insurance penetration in India is increasing. However, you've said in your column that after 2 decades of privatization, insurance is still a sunrise industry. How do you see this changing going forward?
Yeah, this is changing. We have about 4.2% in insurance penetration. This is the 10th largest market. And among the BRICS nations, India is the second, has the second highest insurance covers out of after South Africa. Now, but we shouldn't get excited about that because we are still, if you look at our per capita income and almost non-existent social security. So we need more insurance cover. We need more and more people coming under that. And fortunately, the new IRDA, it's no more new, it's more than a year old. This gentleman has been doing a fantastic job, the regulator. He's changing everything. I mean, just to give you one example is this: earlier for launching a new product, so much time was taken because insurance company would file the product with IRDAI and the regulator will take its own time from between filing and approval, which was an enormous time was taken, and so that it was killing innovations. And now from there, IRDAI first shifted to file and use, meaning you don't have to wait for the approval. You can just continue to use the product immediately after filing it. And now it says, don't even file. You start introducing your products. Of course, IRDA will keep an eye on what you are doing. And if something is wrong, IRDA will pull you up.
Do you see any similarities between the way banking and insurance regulators are now approaching their sector?
Yes, too many actually. If you see, insurance is part of the larger financial system. And on the one hand, you need to have more and more people under the insurance cover. And on the other hand, if that happens, what will happen? The pool of long-term money actually gets gets bigger, and that would help us to actually address the problem what we have from infrastructure financing, even for say Government of India bond, which insurance companies are buying. But once you have the large pool, the burden from the banker's shoulder would be off, both for infrastructure financing or for any other long-term need. And there are many similarities. I just like to mention one of them. Like in bank, you have SLBC, that's the State Level Bankers Committee, where there's a lead bank, and that particular bank, which is a leader bank in one particular state, takes care of how the credit flow should happen to the underprivileged segment. Similarly, now the insurance segment is saying that, look, each of the insurance company need to be associated with one state government and take it forward. So they have involved the state governments in the spread of education. So it's a very similar thing which the Reserve Bank of India done for the financial sector, for the banking sector. Now the ARDAI is doing that. And remember, ARDAI is the acronym, but development is part of it. Now, neither SEBI nor RBI has this development mandate. ARDAI has the development mandate, like the Pension Regulatory Authority also. And this new ARDAI chief, which is, again, I'm repeating, not new, more than 1 year old, is taking the development mandate very seriously. And I'm saying in a positive sense.
How will IRDAI achieve these twin objectives of achieving insurance for all and the ease of doing business?
So there are changes both in mission and vision. I mean, it has to be, as I said, development is the main agenda. It's insurance for all, and to ensure that everything that's to be done, it's been doing. For instance, from rule-based regulation, it has gone to principle-based regulation, which means no micromanagement. It's left to you. It's left to the insurer. I mean, of course, you can't exploit the insurance buyers. You can't missell stuff. That it's keeping a hawk eye. But overall, it's a principle-based regulations, no more micromanagement. That's one structural part when it comes to regulations. The cost of compliance is going down. Now, on the other hand, if you see how to spread, now it's talking about, apart from introducing newer products and going for a huge coverage, now you're talking about one platform called Bima Sugam. Now, Bima Sugam is for smooth and efficient servicing and selling of insurance, claim settlement and selling of insurance product. And along with Bima Sugam is also attaching the two more platforms. One is called Bima Bahak and another is called Bima Vistar. Now, all this, if you combine all the three, in the rural India, particularly in the Northeast, where the insurance coverage is minuscule, you will find people, and technology is making it possible. It's doing that. Now, there have been talks that, look, I mean, you are taking care of only the people, the insurance buyer. What about the distributors? No, the distributors can work as an intermediary even on this platform. So it's not that distributors are no more there.
Well, insurance does seem to be a very happening sector right now. A lot of interesting things that IRDAI is doing, bringing down the cost of compliance, following a rule-based principle, not principle-based regulation instead of rule-based, as you said, and ultimately also involving state governments and reducing the burden on banking system. We have to watch out for the draft insurance bill and what it holds for the sector's future. Thank you so much, Kamal, for joining us today, and we'll see you again next week.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.